What's up everyone, it's Karthik with MoneyVest. Welcome on board for our CPI inflation live stream. Let's do this. We've got the inflation numbers coming out in under 13 minutes. So about 13 minutes we're going to get the CPI numbers and we'll take a look at them for the month of June. I'll go over the expectations. I literally just got back home. I was racing back home because I knew I had to go live for the inflation report. Do me a favor. Drop a like, subscribe to the channel if you haven't already, and please make sure that you share this live stream to as many people as possible, your friends, family, traders, investors, WhatsApp group, Telegram groups, wherever you want to blow this up to so we can have more and more people join us. And also, we can do our poll. So we'll do a 13-minute poll. So markets after CPI today, rally or drop. So we're gonna do the poll right now. We've got this going, so I'm here. We'll get this party started, so make sure that you do participate on the polls as well. Pre-market, we are seeing a lot of momentum, so once again, thank you so much for joining, everyone. Ryan says, assumed you went back to bed. I should have, right? I mean, given that Nvidia is just absolutely ripping right now, Fed over 171 bucks, I'm gonna have to roll a lot of my options today. By the way, speaking of my positions, this is what the portfolio right now looks like. PNL for the open PNL sitting at just over $70,000, and the year-to-date sitting at just over $74,000 as well. I've got lots of contracts that are now in the money. I've got the SoFi calls, Tesla calls, HIMS calls, and Nvidia calls are all now in the money. BITX is, I think, also in the money because I had BITX actually selling off pre-market. It's down over 4.7%. So if I come over to BITX, yep, so it is now back out of the money since $66 was the call strike that I pushed out my position to. So that is now back out of the money. And of course, Oscar is a brand new position that I'm starting out in my portfolio. But of course, Nvidia, I'll have to do something about it because of the fact that it's absolutely ripping pre-market up over 4.3%. So very quickly going over to the expectations here. So we'll come over to Econ Day. 2.8% is going to be the previous number on core, but the expectations are for 2.9 on the CPI. So 2.9% is going to be ex food and energy. So that's going to be core CPI. And the headline is expected to also increase to 2.6% from 2.4 to 2.6. So we'll see what these numbers are going to look like at bls.gov, which again is going to be the Bureau of Labor Statistics. And we're going to get this number exactly at 8:30 a.m. Eastern in about 10 minutes here. We're going to get these numbers. So welcome everyone. Thank you so much for joining. Martin says, brilliant. I can follow you. Update from the pool. That's amazing. Enjoy. I mean, a lot of our members have been on vacation. They've been enjoying by the beach. And that's really what I want for each and every single person. Like, I love when I see our members and, you know, our community people just enjoying their vacations, enjoying and having a good time, because that's what life is all about. It is not just being stuck to the screen, looking at the markets every single day, but markets are one of the best ways to build wealth over the long term. And of course, investing and trading allows you to compound over many, many years, and the exponential effect of compounding takes over, over after a few years, right? You actually start to see that parabolic growth, which is what compounding is all about. And then it kind of frees up so much of your time. It frees up so much of your life that you can pretty much do whatever you want, whenever you want, with the people you want. And that's really what my goal is for each and every one of you. That's what I want to build. So, perfect. What is your current SoFi calls you rolled out? Are you still in October? No. So I think I'm out to February right now. So 2026, $21. I'm actually waiting on rolling them out further because SoFi is kind of hovering around the $21 range. So you'll notice SoFi is just over $21. So I'm just a little bit in the money right now. So again, I'm planning on rolling out if it continues to break above $22, $23, $24. It's overdue for a pullback. So if you do get that pullback or that correction, I'm going to be back out of the money and I'll keep those $21 calls. But if you do break out and continue to move higher, then yes, I will be ruling them out. Another honorable mention is Palantir. Palantir was up almost 5% yesterday. So, obviously hitting a new all-time high. So if you just have these four names in your portfolio, the ones that we have in front of us right now, you've got SoFi, you've got Tesla, you've got Palantir, you've got Nvidia, and maybe we could add like HIMS or BITX to that equation, because BITX is also up quite a bit in the last 1 year. It's up 130%. And HIMS, of course, is up year to date quite a bit. It's up a little bit over 111%. Then you've absolutely crushed it in this market so far. I mean, these are the stocks that are actually moving quite aggressively, right? That's what we've seen. I mean, SoFi has been on fire. Nvidia has been on fire, obviously. Palantir's really picked up. And year to date, the stock's still up over 95%. I mean, it's almost doubled this year in the 6 months as well. And of course, Tesla struggled year to date, but it has seen those crazy rallies, right? Getting up to 480, 485, brand new all-time highs before, of course, rolling over. So, Justin, MoneyVest, when you're doing a day of the life of an investor trader. So, I don't know, man. I don't know. And it's honestly not that exciting at all. Like, I am going to be, for the most part, just researching, reading, working out. That's pretty normal. It's nothing crazy. And, no Lambos or nothing like that here. Because I really want to front load a lot of my investing and trading journey, is that I want to be very aggressive with saving and investing right now. So that I can kind of ease a little bit more in the future, right? So that's really been my philosophy, is to kind of be very aggressive right now with my investing and saving. So one of the first things I focus on, of course, every month is my savings rate, and then taking that and investing it as much as possible, trading with it as much as possible to keep compounding. And that number will eventually come down as, I have my own family and I've got other bills and other obligations to take care of. But right now, my main focus is to be as aggressive as possible and front load a lot of my investing and trading. So yeah, you won't see anything crazy if I do ever do a video of day in the life of an investor trader. Nothing. It's just going to be me waking up, getting coffee, and then doing a lot of Zoom calls, a lot of client meetings, and then of course, researching, reading, getting ready for the market open, engaging in our Discord, working with developers on the website. And that's it. So that's going to be the day in the life. So, okay. Hope you all are ready. So make sure that you do participate on the poll. We got 137 votes. Let's see if we can at least get up to over 200. And what are you expecting from the markets after the CPI numbers come out in about 6 minutes or so? And right now, pre-market, everything is looking pretty solid. I mean, Nvidia's 171, SoFi is down slightly, Tesla slightly up, Palantir slightly down, SPY is up 25 basis points, and QQQs are also up over 0.5% thanks to semis. So semiconductors is one of the main reasons why the Nasdaq 100 is pushing up. SMH, new all-time high, just shy below 291. And up almost 2% on the day so far. So hope you all are doing great. Let's do this. And by the way, if you want to join, again, link's going to be down below. There's an additional 10%, so over 40% on an annual basis. And if you want to do a Zoom call with me, you can email me, from after the markets open at around 10 a.m. Eastern all the way till 2 p.m. Eastern. I'm doing Zoom calls. I'm literally on back-to-back meetings, back-to-back calls with members and people who want to join, who want to learn more about our community and, how I can help, how we can help as a community in your investing and trading journey, because that's the main goal. That's the main focus, is to be really obsessed with your journey and helping you make better decisions, more confident decisions, and of course, be a part of your journey. So if you have any questions, email me. I'm more than happy to set up a Zoom call and we can get on the call and talk all about markets and your portfolios and even how we can help. So here we go. We are ready for the inflation numbers. I will reload the pages as soon as the numbers hit. And that's going to most likely happen at 8:30 a.m. Eastern. And in about 4 minutes here, we're going to take a look at the news release. And I'll, of course, load up the PDF as well. I'll open up incognito just in case there are any issues. But I've got the CPI numbers right here. I'll reload it as soon as 8:30 a.m. hits. And, of course, we've got the markets over on this. So I got Nvidia, SoFi, we'll keep Tesla, and then we'll keep QQQs to take a look at how the markets react on this CPI print. Let's do this. Let's do this, everyone. I'm going to go over some of the comments here. So let's go, let's go. Bulls are delusional. No time to sleep when rolling must continue. Yes, I got to keep rolling to capitalize on that upside. We'll see what kind of numbers I'm working with once the market opens. AMD is overbought. AMD has also been on a very strong momentum higher. Vincent, what do you guys think somebody who is sitting on 50% of their capital should do right now? I want to deploy money, but it seems so risky right now. So, if you are sitting on a lot of cash, you really have to first identify whether you want to invest in ETFs, such as the Vanguard ETFs, which are low-cost index funds and ETFs, or you are building a portfolio of individual stocks. Because time and time again, history has suggested, and we've done, back testing on this, it doesn't matter where you end up buying, the broad-based ETFs or indexes, your performance is going to be very good, and it's actually much better if you dump it in lump sum as opposed to dollar cost averaging slowly and steadily. So in other words, even if you dump in lump sum at all-time highs in a Vanguard ETF, which is like a diversified S&P 500 or NASDAQ, and your holding period is long enough, let's say 3, 5, 7, 10 years out, chances are you're going to be fine. You're going to be doing very well if you continue to compound and dollar cost average into that portfolio. But if your idea is that I want to invest this into individual stocks, then it's a whole different story, right? Then more broadly speaking, yes, a lot of stocks have moved up quite a bit. I mean, Nvidia is almost doubled now since April 7th. Palantir is up almost 100%. There's a lot of stocks, right? SoFi has gone from $8, $10 to now $21. So then it becomes more of a question of, okay, which stocks, which sectors, and at what prices. So that requires more discipline, it requires more patience, and it requires due diligence and research on your part to figure out what stocks and at what price points. But if your goal is to really just buy and hold a passive index fund or an ETF, doesn't really matter, right? Then lump sum investment into a Vanguard fund, just buy and hold and forget about it, is going to be just fine. But individual stocks, it's going to be a different story. Yes, the risk reward is not that favorable. So, okay, I like to invest individually only because my total capital isn't extremely high. I'd rather be aggressive and take medium risk. That's fair. And that's what you would want to do if you are kind of early in your journey and you're working with lower capital, because growth is the main focus, right? As I mentioned before, concentration is what builds wealth. Diversification is what keeps it. So it's really important for especially younger investors, traders, to be a little bit more growth oriented and focus on growth as opposed to income. And income you can generate from diversification, right? You can invest in bonds, you can invest in real estate, and that way you're kind of diversified across different assets and generating a stream of income through rental properties or fixed income, right? But early on, you want to be very aggressive. Here we go. So we got inflation numbers just came out. I'm going to reload this and we're going to open up this PDF. And let's take a look. For the month of June 2025, here we go. Inflation increased by 0.3%. That's the number that we're working with. And yes, we did see an increase in everything, especially headline inflation going from 2.4 to not just 2.6, but 2.7. 2.7 is where we're sitting for all items, all items basically. So headline CPI. And all items less food and energy is now sitting at 2.9. So we actually did see inflation come in a little bit hotter than what the expectations were. I'm actually surprised the markets are seeing a positive reaction to this news, because if anything, that kind of lowers the probability for a potential rate cut from the Federal Reserve, considering that this is an uptick on both headline and core inflation. So just to give you a bit of an idea, all items, which is your headline CPI, 2.7% for the last 12 months, and core, which is excluding for food and energy, is at 2.9%. So let's just go over to some charts to give you a more visual representation here. So this is where we are, and you can see that that is the uptick that we're seeing from 2.4 to 2.7%, which is higher than what the consensus was. Consensus was 2.6, and we came in at 2.7. For core, consensus was 2.9, and we actually came in exactly at 2.9. So if I remove for that, we got that small tick from 2.8 to 2.9%. Now, what's the main culprit? Month over month changes. Energy is once again higher. It's 1% higher month over month, still down on a year over year basis. So we're still seeing deflation on energy, which is down almost 8, as much as 8.3%. Energy services, though, are up over 7.5% year over year and 0.9% month over month. so in the month of June. Now, other items, we did see 0.7% decrease in used cars and trucks. New vehicles down 0.3%, still up on a year-over-year basis. Apparel up 40 basis points month over month, down 0.5% year over year. And then some other things like shelter, transportation services, medical care services, they're all up anywhere from 3 to 4% on a year-over-year basis. Another really big change was utility piped gas service, so 14% up on a year-over-year basis. And then we did have food prices also increase 3% year-over-year, or 0.3% month-over-month. Market sees that as a big positive. I'm not sure if I follow, so that's something to keep in mind. The market's initial reaction may not be the actual reality, right? These moves are very vulnerable to fading as the market opens and we see more liquidity coming in. But I'd be very careful with this initial reaction from the market, because oftentimes we've seen when the Federal Reserve starts talking or where the interest rate decision comes in, the market moves in one direction and then it reverts right back to a different direction. So just be a little bit more careful, because inflation is, according to this report, moving higher, which could potentially lower the probability for interest rate cuts this year in 2025. Okay, so, portfolio might be pushing higher even more. There we go. So the P&L for the day is now sitting at just under $8,000, of course, thanks to NVIDIA, which is making most of it. Tesla, just under $400 right now on the day. Oscar slightly down, SoFi slightly down, BITX is down quite a bit, down about 4%, but the options portfolio is set to open at a brand new all-time high. So year-to-date gain sitting just over $75,000, and I think it's going to be closing in on 28-29% on a year-to-date basis for the gains themselves. So that's where we have the inflation numbers coming in. We got 0.3% for month over month, which was on par with expectations. CPI year over year coming in slightly hotter than what the expectations were at 2.7. Ex food and energy, so core CPI coming in slightly below expectations on a month over month basis, and then year over year coming in on par with expectations. So a bit of a mixed report, but the headline numbers, the year over year numbers, that's what matters most. And we did see those numbers either come in on par or slightly hotter than what the expectations were. So yeah, those were the inflation prints. So the Jersey sum says, yeah, so again, I would not dump a lump sum divided into over a few months and DCA that way. So historically, we have studied this. And if you are investing in, let's say, an ETF or a Vanguard index funds, it's actually more beneficial to be investing a lump sum than as opposed to doing it through multiple different phases or dollar cost averaging, because of the very fact that your capital sitting on the sidelines in cash is not generating anything, as opposed to, of course, investing in lump sum. And again, this is just historically backed data. A lot of people might argue, like, what if you invest lump sum and the market tanks 10%? That is always going to be the risk, right? That there's always risk in investing in the markets in general. But looking at historical studies, lump sum has proven to be a better approach than as opposed to dollar cost averaging over many, many months or weeks, especially if the index ETF is the main goal. But yes, if you have, let's say, a decent level understanding of technicals, fundamentals, macros, volatility, then you can make smarter decisions around it and be a lot more aggressive when the VIX is higher and the money invest index, of course, is lower, and the markets themselves are lower as well. So that's something to keep in mind. Yeah, so not shocked the market is reacting to NVIDIA, not CPI. Yeah, that's what's happening right now. So we're seeing a little bit of that pump. Tesla's pushing up 0.5%. We got QQQ is now up 68 basis points, ready to open at, I think a new all-time high might be for QQQs as well. Yep, so new all-time high coming in for the NASDAQ 100 at just under 560. And for SPY, we're also at an all-time high at 627. Now, what's also interesting is RSP. That's the equal weighted index. And really, I want to highlight the fact that, yes, we did hit a new all-time high very recently, but we just did that like a couple days ago. So that just goes to show that this has been a very, very concentrated rally as well, only because it took us a lot longer to get up to new all-time highs than it did for the S&P 500, because the bigger companies and the Magnificent Seven are really pulling their weight for this market higher. That's exactly why the concentration risk is also increasing because of the fact that a third of the S&P 500 is now just 7 stocks. And 40% of the S&P 500 is just 10 stocks. So imagine 40% of the entire market is concentrated in 10 companies and 10 companies only. Absolutely insane. So Ryan says lump sum has beat DCA 66% of the times. I agree. I think that's very true. So CPI numbers came out. Yeah, so numbers just came out and we went over that earlier. We got a little bit hotter than expected inflation on a headline basis. So we got 2.7% on a headline basis year over year, and core coming in at 2.9. So we're kind of flirting at that 3% level once again. So we're closer to 3% than we are to 2% from a Federal Reserve standpoint. And like I said, this is going to raise questions on what the Federal Reserve is actually planning to do with interest rates moving forward. Are they planning to cut? Are they planning to keep them where they are? Or are they planning to raise them given the concerns over accelerating inflation again? That's the real question. And like I said, the markets did pop on this initial reaction, but I would not take that as the actual direction of the market, given that some of the initial times we've seen markets revert back to different directions. So it depends on the expectations, right? So if you look at the consensus, according to Econ Day, we had a consensus range at 2.6, and we came in at 2.7. Trading Economics might have a little bit of a different number. So if you come over to, let's say, investing.com, and we come over to the economic calendar. So let's just try and look into that. And yes, earnings season is also getting started, right? So that is also going to be very important for the markets moving forward. So I'm going to clear all of this. We're just going to select the United States, some high impact items. If you hit apply, and we get the inflation numbers, there we go. So, on this investing.com, you've got the forecast at 3%, and we've come in at 2.9. And then, that's a core number. And then CPI year over year expectations 2.6, and we came in at 2.7. So headlines got the same. Core, for some reason, investing has it at 3%, and we came in at 2.9, suggesting that we came in better. But on Econ Day, it shows at 2.9 and 2.9, which is on par. Let's see if our platform has something for us. Okay, so core inflation year over year estimated also at 3%, and we came in at 2.9. And for year over year headline 2.7 estimates, we came in at 2.7. So our platform's also a little bit different, aligned on investing.com with regards to core CPI. But then 2.7 is what we were expecting on our platform from inflation. So, but nonetheless, what we really have to look at is the bottom line. The bottom line is that inflation pushed up compared to previous month on a year-over-year basis. That's the bottom line, right? Consensus is only there to create some kind of perspective, whether we came in hotter or better than where the expectations were. But we always have to look at it from an objective standpoint, which is, where are we compared to the previous month? And that is that we are accelerating higher. So hopefully that makes a little bit of sense on why that is more important than the consensus. So Carlos, again, I think CPI is a beat. Core was 0.2, 0.3, and 2.7 was probably due to Iran. Markets will rip. So again, it's all about perspective. What we really have to be focusing on is where we are compared to where we were. And that's why I've mentioned this before during company earnings as well. A lot of times, our judgment is blurred because of where the consensus was, right? A lot of times we are looking at the report from the lens of whether it was a beat or a miss, and not really comparing it to where the company was same time last year, what the growth was year over year. To me, I think that's more important than what analysts on Wall Street are talking about and where the company ended up being in terms of numbers. Because oftentimes you'll find when the expectations go up so much, and even if the company comes in slightly lower than where the expectations were, year over year might be stellar growth, might be phenomenal. But just because they came in below expectations, since they were so high, stock tanks. And to me, sometimes it doesn't make a lot of sense from a short-term perspective. So How about August and September seasonality? So yes, that is also coming up. That is also going to be very, very important, moving forward, because we've talked about this during our market updates, where August and September are two of the worst performing months in the market. So the last few years, it's been brutal. So we'll see how the markets react this time around. Last 3 months have been very strong. I mean, April was a strong recovery. May was green. June was very green. And July so far is also green. So we'll see what August and September have in store for us this year. But year to date, S&P 500 is now up over 6%, which is, again, from S&P 500's perspective, is very good. Averages about 8 to 10% nominal basis. So 6% after 2 stellar years is also very, very good, in my opinion. So that's where we are. Nvidia is still hovering over 4.5%. Volatility is back down 2.8%. And we got Bitcoin. Let's take a look. So Bitcoin also rolling over aggressively. That's one of the reasons why BITX is also selling off aggressively. We're seeing a pullback in Bitcoin here just under $117,000. So that's where we are. If you have any questions, let me know. More than happy to discuss. If you want, I'm happy to answer any questions related to fundamentals, technicals, macros. Inflation numbers are out, so not really much for us to go over there. And yeah, I'm going to cut the live stream in about maybe 5-10 minutes. Get ready for pre-market. We're also working on a bot, by the way. I do want to mention that we're working on a bot in our Discord, which is going to summarize my entire market update from the previous day, as well as give you the latest 5 to 7 things to know for the day. And it's going to post a message at 9 a.m. Eastern every single day. That's something that we're working on right now. So to really introduce artificial intelligence in our Discord, I think that's going to be saving time. It's going to be very useful, what to watch and what to know for that specific day. All the important things and my remarks and feedback and thoughts summarized in a concise manner in our Discord. So that's also going to be available. Okay, thoughts on Meta. Let's just quickly break that down. So Meta Platforms here, consolidating sideways. Support level is going to stay roughly at $709. Resistance up to as much as $736. Meta is one of those few names, along with Google, that on a price to earnings basis trades at a reasonable level. Unlike Nvidia, which is now sitting at well over 45, close to 50 times earnings. Meta and Google are well priced. Amazon is high, but I do believe the growth is going to be very strong. I'm very optimistic on Amazon long term. And then, of course, Apple, it's just been brutal in terms of its performance. So isn't that why we have Tim off? That the bit will take his job. No, I think it'll complement it because, obviously there's going to be different angles to it because we're not just sharing, because I've seen the updates and that's been incredible. It's been very, very informative and super helpful. But, with the artificial intelligence, I think it's going to be a different angle, kind of summarizing my video as well as other things to know for the day. So that's going to be earnings, FOMC, things like inflation, like we just got today. So those are some things that it's going to sort of highlight for the members, right? We can kind of read it like a morning newsletter type thing for the Discord community. So, yeah. Any thoughts on UAL of earnings? So United Airlines, let's take a quick look. So fundamentally, I haven't looked at airlines in a long time. I don't think I've done a lot of research on United Airlines, but we've got a support right here, 85.50. That was a resistance. Then we gapped up a little bit, came back down, validated that support, pushed right back up. And I've got a resistance marked out around here at 93.70. So those would be the levels to watch. We did get a nice little, gap up and a breakdown. A breakout above this $85 level. So it was consolidating sideways here and here. So bouncing off of these levels before finally breaking out, coming down to that support. That would be the level to watch. And the resistance next at $93.70, $94 for UAL. Thanks for the donation, by the way. Appreciate it. So Raul, just email me, admin@moneyvest.com, and I'm more than happy to schedule something. Like I said, if you want to join, if you want to learn more about what our community has to offer, or you're already part of it and just want to do like an introductory call with me, email me every Monday through Friday during market open hours. I am scheduling calls. Like I'm happy to jump on 5 to 10 minute calls to introduce myself, introduce the community, all the members, and how to engage, how to get access to everything, all the contents. I'm here to help you. That's my main goal. So 4 to 5 hours a day, Monday through Friday, I'm in back-to-back meetings. So email me, admin@moneyvest.com, and we can set that up. I'll share the Zoom link, and we will get on a call to help you in your journey. So that's the whole point, is how can we help? That's the whole idea. Megalift, can you introduce the community to me? Yes, absolutely. So again, Walter, thank you so much. You've been great support to our community. A lot of people have. Mike, Walter, of course, and I'm loving our time in our Discord. Honestly, like we've got a great group of people that are motivating and inspiring each other, and it's to a point where it's now snowballing. And I really don't want to jinx it or anything like I want to knock on wood, but it's been a great group of guys and girls and amazing people, and just love hanging out with everybody in our Discord. We have our own fun, we make money, we talk about different things, and it's not just about, stocks or trading all the time. We talk about other things too. We've got a live channel, which I love spending time there, looking at everyone's different experiences. Somebody's into biking or hiking, or snowboarding or whatever, so it's amazing, and I love it. Do you manage any funds? Looks like you will beat a lot of hedge funds. No. So I don't manage any funds personally, because there's a lot of regulations and a lot of licenses required. But our philosophy is very disciplined investing, right? So we don't like to take on too much risk. My main goal is to reduce the level of risk. Even if I can match the S&P and reduce the level of risk, I would take that any day of the week. But there's a lot of strategies that are not scalable. And that's one thing that I've learned over time is, it is not the same thing if you're managing $1,000 versus $10,000 versus $100,000 versus 100 million or a billion or 100 billion. It's very, very, very different strategies. Some strategies are just not scalable. Like for example, the options wheel and the strategies that we employ, such as covered calls, cash secured puts, or even, creating some kind of a synthetic dividend strategy, right? Which is what I'm running on NVIDIA at the end of the day. Like basically it's not a wheel. It's really, I'm just moving up my call strike, pushing out the strike, and creating those credits along the way while also capitalizing on gains. These are strategies that may not be scalable because of the liquidity. Liquidity becomes a big issue once you're dealing with a lot of money, right? Because once you start trading multiple thousands of contracts, there's just not enough of a market to absorb all that, right? So, NVIDIA might be different because you might still have an open interest of, for example, thousands of contracts, right? So you've got 38,000 and you've got 10,000, you've got 50,000, 30,000, 60,000. So that might still be possible. But some of the other stocks like you look at, for example, if I go over, what else are we trading? SoFi might also be very high. So let's go over to HIMS, for example. Open interest is going to be in the hundreds, right? It's not as high as NVIDIA. So if you put in an order for 2,000 contracts, that's like 70% of the open interest. It becomes very difficult to execute. You'll get a lot of slippage. So yeah, it's different strategies for different amount of AUMs that you're managing. So Lugos, I'm going to sign up. Great. Thank you so much. Appreciate you and happy to have you on board. And again, if you have any questions, just set up a call. More than happy to discuss all of that. And I'm going to end the live stream here. I'm going to spend some time in our Discord, sending everybody an update. And we should be all good to go for this NVIDIA's massive opening. 4.2 trillion is what we're looking at the open. S&P is moving higher to new all-time highs. NASDAQ at an all-time high. SoFi is also moving up. So it's one of those days where we just got to sit back and enjoy the gains. So David says, I think I'm going to get motion sickness from the amount of rolling I have been doing this morning. Mike Walter, do you have any Dramamine? So yeah, I mean, it's crazy. I've been rolling a lot of my options as well. And it's a good thing because we're able to capitalize on the gains that are being created on the upside, while also collecting net credits. So, and I was looking it up, like it's not really a real strategy. It's more like a synthetic dividend strategy that you're creating, because you're creating dividends out of the stock, like Nvidia, which has no dividends. Practically, it's at 0.03%, while also capitalizing on the upside of the capital gains that it has to offer. So Shiraz, web discount code to the website is going to be MoneyVest. If you simply apply MoneyVest, then you should be able to get that. Will you be rolling your Nvidia cover call? Yes, most likely we'll be rolling that out. I'm thinking about the 155 to 160. That's what I will be doing, because that's going to unlock $3,000 worth of capital gains instantaneously, immediately, right? That's one of the things that I love about this, is because even if I'm in the money, if I roll, that's going to unlock capital gains, because I'm no longer capped at 155. I'm going to be capped at 160. So that's $5. I've got 6 contracts. That's 600 shares, $5 profit per share, $3,000. So that would be the idea and the plan. Man, Nvidia just nonstop, almost 5% higher. All right, everyone. So thank you so much for joining. I really appreciate you all. Hope you all got a good update on inflation. Not really much for us to look into other than the fact that we're slightly moving higher. But we're going to jump into our Discord and handle all these degens, whatever they're talking about. Just want to make sure. I got to keep them in line. Otherwise, they'll turn me into degen. I've been taking on way too much risk over the last couple months than I should be. To be honest, I've been taking way too much risk. So it's like a negative effect. They should be more disciplined. Rather, I'm becoming more of a calculated degen. One of us. And you're making money, Caddy. Yes, making more. Because if I show you the options portfolio, you'll notice that my average per week has gone up a lot. Let's see, options portfolio. There we go. Nope, not this one. Let me see if I can bring it up, because I keep track of the performance. Let's see, options portfolio tracker. Yeah, that's the one. There we go. So I keep track of the performance, right? So what you'll notice is usually on my weekly P&Ls, this is the 2025 performance summary. And this is very high for me. Like for me, this 0.97%, so almost 1% per week is high. I don't usually target this. My target is half of that, is 50 basis points. 50 basis points, if I can achieve 0.5% per week, that's 2% per month, it's going to be annualized about 20 to 24%. That's my risk profile. It's like I'm comfortable with that. But man, over the last couple months, it's just gone up because of the risk appetite and more risk on trades. It's pushed up to almost 1%, which, yes, it's worked out, but I'm really not comfortable with this level of risk personally. I know a lot of people are, and a lot of people it might be actually less because it's 62% annualized. I mean, that's more than enough. But I target a lot less. So anyway, so thank you so much for joining, everyone. I really appreciate it. And what is your take on Bitcoin miners? I do like BITX just from a personal perspective, but yes, I think there's a lot of Bitcoin miners that have also been doing really well. So Mara, for example, I mean, it's just skyrocketed 52%. And we've traded Mara before, but right now I'm just mainly focusing on BITX. That's been the play. Don't worry, we'll all get smacked a little one of these days. Don't be a party pooper. All right. Thank you so much for joining, everyone. Hope you all had a great live stream. And of course, have a fantastic day moving forward. And again, link's going to be down below if you want to join, be a part of our MoneyVest community. Happy investing. I'll see you all.